precisely is securitizations and how does it work?
What is actually the securitization? And certainly the people who are here will definitely have a thought in their mind. How is that possible? Because they are used for the shares in the stock market to see, and that is called as the liquid, which is like say marketable. But there are certain things which are illiquid in nature. As you were talking about some assets, that was really a fantastic word which you helped me to start my session. In fact, the securitization allows the financial institutions or the banks to convert the assets that are not readily available for market, or in simple words I can say, which are not readily marketable. And that those assets are converted as a rated securities. Once again, thank you for highlighting that point. There are credit rating agencies which will be rating these converted assets, which in turn they are called as the securities, and that those are tradable, may be tradable in the market, may not be tradable in the market. And now I would like to highlight some examples so that our audience will be getting a fact saying that what is that we are trying to talk about. The most popular example in the world of the securitization is residential mortgages. And we have the credit card receivables. We also have the car loans, auto loans, any specific loans. Now, the conversion of these loans or the receivables, these act as the creation of asset-backed securities for the securitization world. Now the question is, who is converting this? For what this has been done so far? And now we know that these loans are called as the debt instruments, and which are acting as the assets of the banks and the balance sheet. And to offload that component, the banks will go for the conversion of these things. And there is another separate institution which is acting as a special purpose vehicle. And now they are involved in ensuring that the conversion happens from the asset owner. In other words, the originator. Maybe a bank which is trying to convert credit card receivables as a security. And the SPV takes care of this and acts as a connecting bridge between the capital markets, or in simple words, where the investors are found. So between the investors and the banks, there comes the middle, that is the SPV. And now when the loans or the assets or the receivables are transferred from the originator to the special purpose vehicle, we say that asset transfer from originator to SPV. And somewhat the banks will be now much relieved, and they can focus on issuing the loans or the assets or the credit cards for the customers in terms of acquisition is concerned. Now, in simple words, if I want to put it across this, with respect to the US, SPVs are trust, but not as the corporations. But when we look at the Europe, SPVs are more structured as corporations. And we generally say that the securitization can be a trust or a corporation. But there are so many things which we have to look at from the banker perspective, the investor perspective, the investment bank perspective. Anyway, we have a good team here. Definitely they will put across their thought process. But now, there are some benefits when we talk about the securitization, basically for the banks and for the investors. And banks are certainly, in terms of the risk management, this has become so popular in the developed nations. And in India, we are in the phase of seeing these kind of transactions. Now, when we talk about the banks always rely on the three important aspects. One is the retail investors, the interbank, and the third one is the wholesale. And all these three aspects are a part of the funding. We know that. But there should also be one more platform, one more source of income wherein the bank should get. And that is the route where the securitization is coming into the picture. The another benefit is the balance sheet capital management, which you rightly said during your introductory talk, that the companies, that is the financial institutions and the banks, they try to offload their assets. And when you look at the investors, there are again some benefits for them. It is a unique investment for the investors as an opportunity for the risk return profile. And the most important thing is that these securitization offers loans to the borrowers. And now the investors will be having an access to see how the security has been designed, though they will not be having a direct interaction with the borrowers or the credit card owners. So in that way, sir, I look at that the benefits for the investors as well as the financial institutions or the banks.